So over the last 6 weeks or so, I think it's becoming increasingly obvious that at least the white collar recession is here. We have seen tech layoffs to the tune of over 200,000, and unfortunately, that will grow. We are seeing consumer sentiment at the end of 22 at a 53-year record low, which really is shocking. We've seen record low savings. We are starting to see real signs of a recession happening. Will it be a rolling recession with no quarters of negative GDP? Will it be a shallow recession? I don't know, but I think it is fair to say that the next couple of years aren't going to be a lot of fun. We're going to talk about what a recession means to the three of us. What are we doing? How do we prepare and move forward? Matt, we'll start with you. Recession's here, man. What's going on?
I mean, like when I think the one of the things that I said, you almost fell off your chair. I've still continued my trend towards increasing the number of housing Section 8 units that I have. That's still been part of the course when we have units or before we have units coming available. We literally take the list and we send it to housing and we say, let us know if you've got vouchers for this. What's really interesting is that in my area, in the three towns that I service, there are about 700 housing vouchers
Hmm.
in that area. And they just lost 180 of those in the last 3 months
Hmm.
to investment companies that bought assets and have now handed out those basically eviction notices and vacate notices. So I think that this is a trend that a lot of people in how to handle the recession. If you really believe it's going to be a mild recession, I think you still should be diversified. If you think it's going to be a bad recession, you better get really diversified. You better really know that there's no interdependencies to your portfolio. You need to make sure that you have as many exposures as you can to different things and to different sectors, because that way, with little overlap, you can likely, really stave off any real pain from a heavy recession.
Yeah, the other thing I want to poke at, I just remembered, you indicated in our discussion last week that you just bought a single family home as a rental.
I did.
And the audience was like, tell us a little bit more. So, can you give us kind of the 2 minute rundown of how you found the lead, how you negotiated, what'd you buy, kind of that kind of stuff, just because the audience was asking?
Yeah, sure. So that one was daily homework, hit the MLS. Everyone else had a shot. I saw the listing agent, know the listing agent because I network like you know what,
Mm-hmm.
and knew the listing agent, obviously my agent. I picked the agent that I know that actually has a relationship with her as well.
Mm-hmm.
She did a phenomenal job. She'd already beaten the tar out of the owner to say, you got it, there's work here to be done in this house. You
Right.
gotta get reasonable on price.
Right.
And so that's what we did. So based on relationship, I was the first one to get in the house and
Yeah.
then made a really strong offer. And we got the deal under agreement before their two open houses that weekend.
So let's try to give some round numbers at least. So
Yeah,
the
sure.
the the, the property hit the market at what?
150.
Oh wow. So that was a pretty basically the seller knew he had a problem. So so
Yeah, yeah.
okay. So you go in, you see it first. Do you write a full price offer? Do you go slightly over? What do you do?
So 10% over. I go 165.
Okay. All right.
Because I do the math in my head and I'm like, you know, I can put 50 into this
Mhm.
and I can sell it for 295.
Okay. All right. So what is it? Like a 3-1? What is it?
It's a 4-2.
Oh wow. Okay.
Yeah.
So it's a 4-2.
It's an older 4-2. Yeah.
And is your intention to flip this come April, May, June? You're gonna keep it.
No, my intention is to fix it up. These particular units right now, a 4-2 in that market is worth probably about, believe it or not, it's worth probably close to $3,000 a month, a 4-2.
Oh, that'll cash flow. That's yeah, to quote bigger pockets, that's above the 1% rule.
Oh yeah, yeah. I mean, that
I
building will
I
make
hate that rule.
that house will make that house will make $1,000 a month probably, and
Yeah.
that's the issue is that I haven't bought single family homes because usually I would have to pay 295 to 300 to buy that and then put 50 or
And
60
then
in.
put 50. Yeah. So again, this is funny that you bring this up. This is exactly what I closed on right before Christmas, just to prove I could. Properties that were rough,
Yeah.
and that's where some deals are, and they're on the MLS, right? Because
Yes.
again, there's a lot of people like FHA and VA buyers that need perfect, and
Yeah.
there are some sellers that list at the wrong time, like where you are. Selling in the winter's got to suck, but sometimes you just have to sell. And
Yeah. I mean, there was 8 inches, there was 8 inches of snow on the ground, and
oh,
it was 22 degrees on the day that I went and looked at it, you
there
know?
you go.
And so
Better
being
you
able to
than
walk,
me.
yeah, yeah, trust me, I understand that. It's tough, but here's the thing. This is the part of value add, right? Like
Yeah, exactly.
this is the whole reason I built my course. Oh shit, I'm a landlord now what?
Right.
It's because if you understand when you walk the building and you go, okay, the roof is only, here's the crazy thing, roof is 3 years old, heating system's 10 years old. I've got two of my biggest four expenses already done and taken care of that probably have a 20 years left of time horizon on them. So
Yeah.
really what I'm looking at is, and in a beautiful old New England home, I pull up carpet in a couple quarters and I've got original fir wood floors underneath it. So it's these little things like this, when you understand construction, when you understand what to be looking for under the covers that others might miss,
Mhm.
I unearth a ton of value in this property. And in all honesty, if I wanted to put it on the market and flip it, I don't particularly like doing that just because I put in all the work, I make it beautiful. And if I can still make money with it as a single, let's make money as a single.
Yeah, there you go. Well, Dion, a recession is here. You brought to us in the very beginning being diversified, which Matt ran through, which I totally agree with. What recession's here, man? You're just batting down the hatches. You're going to go back to work, right?
Yeah, that's probably not today going to happen.
But not today.
So for the last couple of years, I would say, you know how there's Crash Bros saying that there's a crash coming,
Mhm.
and 60+% of people think that there's a crash coming.
Mhm.
I think a larger percentage expected a recession coming when we have the
Oh
first
yeah.
real kind of global pandemic in our lifespan, record inflation. Like I actually might call it unprecedented. I don't know because I don't remember that because my memory's short like everyone else's, right? So I would watch Crash Bros, there's a recession coming videos and drink the Kool-Aid.
Mhm.
So what do? I retire from a six-figure job that I like into what we're fairly certain a recession is coming.
Mhm.
What do, Mike? You take a month of vacation,
Yep.
right? So planning for a recession doesn't happen when the recession comes. Planning for a recession comes in the last decade or two. Matt going, I don't want all of my units being rented to construction workers, or all of my units in Silicon Valley going to IT workers, or all of my units in Detroit going to car manufacturer employees. We diversify.
Yep.
So that is, for me, Matt, you're in 3 different towns.
Mhm.
Mike, you're kind of in Fresno, but I don't think you're all located still, all of it in like one
It's
zip
no,
code.
it's a very large city. Yeah.
Right. So you're close to several different economic drivers. I prefer my properties at least 10 miles apart, next to like a base, a port, a college, a hospital, a port, like a beach or something that attracts people. And then we diversify the tenants. So I go 1/3 military, 1/3 working, 1/3 Section 8. That's a rough balance. But also what I really like is I like Class C properties. I like my rents in the range where if you have a class high, B plus A, where you have $150,000 or $300,000 IT worker and IT crashes, what is the IT employee going to do when IT is not hiring? That's going to make if they go out and they start a new career, maybe they make 6 figures, maybe not, right? So they're probably going to have to downgrade. When I have rent that goes out to a police officer making $50,000 to $80,000, or a truck driver making $80,000, and they lose their job, it's actually not that hard to go find another career that starts at $50,000 to $80,000 a year, right? So my tenants, I've had several tenants lose jobs in the last decade, change jobs, change career fields. In a decade, I have not had one later missing rent payment. I'm not saying that that's why, but I'm saying one of the contributing factors is when a recession comes and people get laid off, unemployment pays enough to pay the rent, right?
Yeah.
It's not a $5,000 a month rent payment. It's a $1,500 a month rent payment. So I think that learning from watching content like you guys, I've known that these are the things I have to do. I don't want to have all construction. And then that one, they all pay great when things are great, right? And so Matt, you learned a rough lesson
Yeah.
that I'm benefiting from. So thanks for sharing your information, and the people watching are also benefiting too. I think that's what we do with the recession that's coming, is we invest like we plan on it.
Yeah.
And the crash bros are for for years saying, here's the reason there's a crash, here's the reason there's a crash. I don't agree with them. I don't see it coming. But I invest like it's going to happen.
Yeah.
I can handle a 50% rent reduction, which we've in our lifetimes never seen rent come down. In double our lifetimes, never seen rents come down. They've plateaued a couple times. But I invested. I didn't over lever. I have a big enough margin or gap, not margin as profit, but like a gap between rental income and expenses to where it could drop 50% and I'm still not going back to work. So if I knew a crash wasn't coming and a recession wasn't coming, maybe I'd lever more, but we don't. So we invest and plan for this. And then when it happens, this is where I kind of feel like a horrible person. I feel bad for the person who's got just the job as their income, who's for years been saying, why do you invest in real estate? Isn't that risky? You know how risky it is to have that one job that can be taken away, because when you're selling your life 1 hour at a time, eventually people are going to stop buying. But when you have several different sources, diversified sources in diversified areas, a recession is like me being the fat kid in the candy store. Right. Okay. Well, I'm gonna sit back and like Matt, I'm gonna go, okay, I don't need the Lamborghini, but I'm gonna watch. If it drops low enough, I'm probably gonna pick one up. Right. Yeah, that's my plan.
So it's funny. I know Matt and I have closed on transactions in the last 8 to 10 weeks. Dion, I think you're writing offers.
I'm making offers. True? I made an offer, went out Sunday night. So it was a
so what
duplex
was it?
It was duplex in my area. Last year I bought a duplex for 400,000, and I've been telling myself, look, if I see a duplex anywhere close to that price, I'm buying it, because our rents in this area. So I did a members only live stream, which I do on Fridays on my channel, where we literally, I just super boring. So don't become a member if you want exciting, because all we do is we open up emails in my market or in the members markets on a Zoom, and we go, let's look at deals. And we go, okay, what do you like? What do you not like? How did you process this? So I looked at like 18 deals in my market that sucked. And I was getting ready to close up, and I scrolled to the top, and I was like, hey, there's a duplex for $400,000. Why didn't I see that when I started? So I click on it. It's smaller than I like. It doesn't have garages. It's not in a war zone, but it's borderline. It's really close. And I'm like, all right, it's really close. If it's a base hit, it's a third base hit, right? And left-handed, I'm usually over on first base, but I make an offer. Goes for 50,000, all cash above asking.
Really?
Seems like we're in a crash. It just, I don't know how.
So I'm curious,
what
did you offer? Did you go under?
I went 390 cash, and if they came back with, because I'm gonna do cash, and then I'll probably refinance out. I'll watch rates. I'm in a weird position, so not everybody's gonna be able to buy cash. I totally get it. The deal made sense with it would have been like, it was like a 6 to almost 7% cash on cash return with the rents in my area, with a 6.5% interest rate. Like, we ran the numbers in the members only live stream. So it was really close, but cash, it made sense because I'm looking for cash flow. I'm retired. Don't compare year 12 to year 1. I would have went to 4 cash.
Okay.
But 450, no. And there were multiple over asking offers.
Wow. And so that's amazing. So clearly a crash is here.
Absolutely.
There's no opportunities.
Yeah.
Wow.
Yeah.
That's amazing. So yeah, go ahead, Matt.
There was a 4-unit. So there have only been, in my markets, there's only been 4 4-units that have changed hands in the last 2 years.
Wow.
4 quads. They're really hard to find, and they're gold when they come up. And out of those 4, I bought 2 of them.
Of course you did.
One of them, I was just like, absolutely not. It's on the absolute worst street. Like, it's backed up to train tracks. I don't care if you gave me the thing. I'd dress it up and I'd resell it.
Right.
Because no one's staying there for anything more than a year. But what was really interesting is another one came on. It was 1980s dated. It was a 60 or 70-year-old building, so newer here, but still very dated. The rents were about under 7,000. They went on market for 780, and they had 5 offers over 780. I don't know what the final number was. I didn't play because I was just like, if you can get over 780 for that, I've
Yeah.
literally got some 4 units that are worth $1 million, and I
Wow.
never ever paid more than $450 for one.
Yeah, it's really interesting because again, I think the housing market is I'm calling it bipolar or bifurcated. I don't know what the right word is. Your
Agreed.
guys' vocabulary is better than mine. But luxury is done. It's frozen.
Yeah.
It won't be better all year. Its inventory is going to stack up. It's going to distort numbers. But the affordable stuff and the small multis 4 and below,
Yes.
it's I don't know. It's like hen teeth or whatever they call that stuff. It's scarce. Dion.
Yes.
So here's the thing that investors need to remember. New investors, experienced investors, when you hear about a deal like the duplex that went 50,000 over in my market and Matt's market, where they got fourplexes that are going for really high numbers that make you think, oh, selling would be great. The world isn't full of investors that are looking at, I have cash to deploy, let me get the best yield. There are investors thinking, I need to stabilize my portfolio, so I'm going to invest cash with no leverage and don't care about yield. I want the money to not lose value. So there's
Right.
foreign investors doing that. There's firms doing that. There are people with 1031 money that had to sell, not they had the interest rate trap, but maybe there was a death in the family, or there's probate, and maybe there's divorce.
Yeah.
So there's these choices where people go, yep, I can no longer run this as a rental, or something like rent control comes or is talked about, so they go to get out of it, or we have an eviction moratorium that was determined to be unconstitutional, but one county keeps doing it, right? LA, it's still there, right? I don't know if it's even gone away yet. It's been extended again.
It's
There are
got
people
extended
that-
to the end of January with talk about extending to June.
So there are people that will sell that have a bunch of money to deploy. So when you do something like, okay, here's the number that makes sense, and it's the highest number I could possibly go, and somebody outbids you by a significant amount, they're not stupid. They're in a different position.
Well, they might be stupid, but yes, they're probably in a different position.
Right.
Both those things could be true. Oh, that's awesome. And again, the whole idea of a recession here is, if people go back and watch our combined content, we've been preparing for this for probably 9 months.
Yeah.
And we're not scared. All 3 of us are taking action, deploying we are deploying capital into a recession. I've been very clear with folks. I plan to deploy more capital in the next 18 months than I did in the last 36 months. You get rich, you get wealthy in a recession. It's just, I've been here before. They don't scare me. I saw it coming. We got prepared. We got our debt right. We got our stack right. It's going to be like we are the fat kid in the candy store. And I look forward to seeing what the 3 of us do. Dion, where can people find you?
Right here on YouTube, Dion Talk Financial Freedom.
And Matt?
Lumberjack Landlord, Instagram and YouTube.
Awesome. Thanks, guys.